podcast this morning, we'll be learning how to do a river dance jig. Is everybody ready? It feels like this oil market is doing a river dance jig in essence with the volatility that it's facing. Well, it is Thursday, March 17th. And we will kick off this morning with our regular Thursday morning commentator, Dr. Carol Knackley, CEO of Crystal Energy. Carol, lovely to see you. It is the morning after the night before of the final Fed moved off their position of sort of multiple years of denial of inflation and made the very tepid step of a 25 basis points. But what the market seemed to ignore was the fact that they painted a fairly hawkish, robust outlook. If indeed they'll meet it, we'll see. But nonetheless, markets rallied on the back of what was an expected tepid move. Your thoughts the day after Mr. Powell finally got off the stool?
Good morning, Sean. Good morning, everyone, and happy St. Patrick's Day. I wanted to wear green, and I forgot, and I realized that my earrings are green. So take it this.
Well, that's the subtle touch. That's the Lebanese in you, or stylish, subtle touch.
Exactly. Here they are.
There you go.
All right. So look, what we saw yesterday, actually the last 2 days, I heard there were announcements and publications that actually reflect the kind of uncertainty we're having today in the market globally and energy markets on the macro level, on various levels. And with that, I mean, first of all, you have, as you mentioned, Sean, about the Fed finally announcing a long-awaited, I have to say, decision to raise interest rate, because the market has been expecting interest rate rise, but there were some kind of diverging expectations about the level of those rates increase. So 0.25% is probably in line with the general consensus about the first step. But what surprised me is that they are preparing us for maybe another 6 times increase throughout the year. But the message, the good news there, and that's why the market did not brush aside, but actually they kind of, if you want, indirectly welcome this kind of decision, because there were some reassurance from Powell, because he kept on saying that first of all, he dismissed the probability or the scenario of a recession for the American economy. So he said, no, the economy is doing well and they can sustain this increase in rates and even more for the rest of the year. So it's time to act. So that was, I saw it more as giving some assurance to a market which is pretty nervous. But at the same time, we saw the IEA report being published and warning of some dire consequences on the market because of potential losses of almost 3 million barrels a day of of Russia's oil exports, with serious implications on prices and on the economy. And then we had a day earlier, I would say, the denial view of OPEC's publication by saying, you know what, we're not changing anything, everything is fine, tight market, better outlook because of COVID and some geopolitical risks. So they acknowledge that we have some uncertainty. So we have this kind of spectrum of views which actually reflect the outlook, the current sentiment in the market. And that's why I think we should expect to see volatility to continue for the foreseeable future.
Well, let's welcome Rad Al-Qadiri, who is the managing director with the Eurasia Group, director for energy, climate, and sustainability. And for many of us, Rad has been one of the longest and most respected geopolitical analysts in the energy space for far too many years, Rad. One cares to imagine. And it's lovely to have you at this table, and particularly at this time. I went to bed last night, Rad, thinking a somewhat optimistic thoughts with the news out of Ukraine that there was some sort of a consensus emerging between Russia and Ukraine on a possible peace agreement, only to wake up to the news that Joe Biden had called Putin a war criminal. I bring that up because I know you, a long time analyst and diplomat working in Iraq during the very nasty years of the early 2000s, and when Saddam Hussein became essentially unrehabilitatable to the international community after multiple labels had been projected on him. So that's kind of my question to you this morning. Is Putin rehabilitatable?
Look, I think there are, I mean, as you mentioned, I think there is a sentiment out there that would like to see this conflict resolved. There is a hope out there that somehow a middle ground can be found. I think that's going to be very difficult for two reasons. One, the level of climb down by President Putin and Russia that would be required at this moment in time to reset pre-February 24th. But also, you know, and I think it's sometimes hard to see from outside of Europe and outside of the United States, just the significance that is put to this invasion. And the extent to which it has shaken European and Western security architecture in Europe, and you know, will lead to a reset of relations with Russia. And as you mentioned, sort of the potential unrehabilitation. Now, some of the rhetoric, I think, sort of reflects knee-jerk reactions to what's going on. The United States has taken a very strong stand against this. You know, it's seen as extremely threatening to its NATO allies. It's seen as an extremely threatening move in and of itself. Now, we can discuss the cultural relativism of, you know, invasions in Europe versus invasions anywhere else. And I think there's a long discussion to be had on that. But the reality is that it's very difficult to see, you know, Russia under Putin being able to be restored in Western security minds and Western political minds and in US political minds anytime soon, which is just going to exacerbate, I think, some of the isolation that's taken place. You know, what we have seen put on Russia so far are sanctions that are really designed to isolate it from the Western financial system, Western economic system, that are designed to bring it to its knees, to systematically sort of strangle the Russian economy. And, you know, it would take, I think, a fairly major climb down at this moment in time by President Putin as a first step to some sort of rehabilitation. It's hard to imagine what that would be. And in the longer term, I think, you know, we have set the course for a dynamic where this becomes a major dislocation and a major disruption in modern, in sort of certainly post-Cold War European history.
Wow, a lot to dig into there. Let's first bring in Tom Walsh, doctorate research student at Durham University, and doing his PhD on the tragedy that is Yemen. Clearly a very difficult subject and one quite complicated. And Tom, before I kind of try to rope in the connectivity between the Gulf, Middle East and the events happening in Europe, but I'd welcome your thoughts also as a security analyst in Europe, where you see from Britain's perspective. We saw your prime minister sitting with the Crown Prince of Saudi Arabia yesterday, looking for more oil. How robust, how significant a fracture do you think this is, these events in Europe that Rad has just articulated?
A very significant one. And also, I'll just reiterate the Happy St. Patrick's Day sentiment. You can see by my last name that my Irish heritage is strong. So
that's good. That's
answer to you all.
You can take the paddy out of Ireland, but you can never take the Ireland out of the paddy. So that's where it goes.
Right.
Especially on rugby weekends like last weekend, right?
Of course. Yeah. But I mean, I think this is really significant, a really significant moment in terms of, I think Boris Johnson has used terms like a sort of an addiction the UK has had to Russian oil. And so this has kind of been the push to focus on other ways to diversify to some degree. I mean, he's talked about renewable energy, but really the thrust of it seems to have been this grand trip he made. I think he did the Emirates and Saudi Arabia in one day. Just focusing on Saudi Arabia for a moment, obviously he's faced widespread criticism for going there from his own government, from some of his own party, even. On
what grounds? What was the criticism?
Well, I mean, the criticism is that 3 years ago, when he was sort of foreign minister around that time, Boris Johnson was condemning Mohammed bin Salman over the alleged murder, his involvement in the alleged murder of Jamal Khashoggi. And he literally said that MBS had copied the playbook of Vladimir Putin. So the way that the British public and the Labour Party and many of the Conservative Party understand this is, well, you're kind of going from one person you're calling a war criminal to another person who you previously called words to the same effect. So it's really significant. There is some small hope within small elements of the Labour Party, for instance. I think the shadow energy minister, Ed Miliband, has sort of been saying, well, this is our opportunity now to really divest and to pursue renewable energy. But it does look increasingly like Boris Johnson's tactic is to focus on getting more hydrocarbons from people he is closest to in terms of alliances.
Well, it's certainly a diversifying moment, if indeed that lasts, or if indeed there will be a positive response, given that OPEC Plus has been very reluctant to react. Carol, this moment of where the nexus of these events are happening. Obviously, the interest rate hike yesterday, the outlook for much greater number of rate hikes, that tightening cycle coming at a time when we have this very elevated commodity price, and now the uncertainty around with the resolution here. Despite this dislocation, I dare I say it, oil prices are only $100 a barrel. We have a headline in our Daily Digest this morning with the IEA announcing yesterday that next month Russia will be shutting in 3 million barrels a day of supply, and the oil market actually price fell yesterday. I mean, these are very strange times. How do you see these nexus coming together now?
Yeah, I like when people talk about oil price of 100 as being a bargain compared to what we had a week ago when prices nearly touched 140. But that's a problem, Sean, with tracking these kind of day-to-day movements in oil prices, because I've been in this industry for almost 25 years, and I was told that you don't really learn much by tracking these movements, especially when you have a heightened level of uncertainty, which is being dictated by the geopolitical developments, by geopolitical risk, but also macroeconomic uncertainty, because let's go and see what the IMF is going to publish with their outlook, global economic outlook in April, because they already downgraded economic forecast for major economies back in January without accounting for the geopolitical risk. So therefore, talking about an oil price of 100 is still quite high compared to where we were maybe 2 months ago, even before that. So we're still in this high zone area, and that by itself, if it stays longer in this zone and upper levels, then we're going to see increased inflationary pressure, worsening the situation, and that by itself can spell trouble unless central banks, for example, in Europe, take a faster action and more radical action, but that by itself raises another concern. So for me, the wilder card today, yes, there are lots of uncertainty in oil market, but I am more concerned on the macroeconomic outlook that will also have spillovers on oil demand, and talking about demand destruction because of prices high, etc. But it really, I laugh when I see people talking about oil prices falling to low levels, and we are still at 100. 100 is not low by any standard.
Well, Rad, your thoughts on that? I mean, my question to you is, why are oil prices so low when we have, one of the world's biggest oil producers, as you described in your earlier comment, in a slow strangulation, and we're only in the early days of the scale of the disruption that we've got another headline in our digest today about you nearly feel sorry for them if you didn't realize they were all billionaires, but the energy trading firms running to the banks looking for to extend the facility because of the tightening in the market. But ultimately, the idea that given the level of dislocation and disruption you mentioned in your first point, and the outlook for it being quite negative, that oil prices are falling and not rising and not holding at those elevated points above 130, which sort of seem to embrace the scale of the geopolitical risk from a week ago would seem to be still present.
Yeah, look, you're right. you hit the nail on the head, and I'm doing exactly what Carl sort of said you shouldn't do. So I have the forward Brent price open beside me all day long, just watching it go up and down, and I'm literally watching it bounce around 100. My take on the market actually was that it was beginning, prior to the IEA publication, it was beginning to find an anchor. I think what you had for the first 2 weeks of the war was a market that was desperately looking for some sort of foundation on which to sort of decide where prices should be. It was being hit. I mean, the volatility in the market, certainly in the 30 years I've been looking at markets, was unique. It's rare that you see sort of $20 up, $20 down on the same day. And I would mention that, when oil hit 140, it also went straight back down to 120 within a matter of hours. So, that wasn't a sustained price. And I think that gives you a sense of a market that is looking around for indicators, that's looking around for, if not certainty, just some sort of foundation on which to rest. I think it found it towards the end of last week. I think the volatility started to seep out. Certainly the level of price swings started to seep out, and you started to see the market fall, which makes the IEA's headline somewhat, I think it's been taken out of context, and I think the IEA, can sort of take a certain. The IEA doesn't mind sort of throwing in an incendiary headline every now and then. For this reason, it's not sanctions that are getting in the way of this. Oil is carved out, gas is carved out for this moment in time. It is self-sanctioning by Western buyers, and I think this notion that you've got 1.5 million barrels a day of crude and, 1 million barrels a day or more of product necessarily being taken out of the market by sanctions brings back memories of Iran. It brings back memories of Iraq in the 1990s. It is, there is this sense of absolutism. Oil markets are fungible at $65 a barrel, which is what Urals was trading at yesterday. And people are going to pick it up, and you're going to get traders who aren't, once they get through the compliance risk and who don't have the same sense of reputation risk, and particularly I think buyers from the East who will start to pick up these cargoes, and you'll see the resumption of that trade. And I think that's where OPEC's head is. OPEC is looking at the market fundamentals that were outlined prior to the war, and essentially saying, look, we were anticipating stock builds from the second quarter all the way through to the end of 2023. That suggests weak fundamentals. It suggests a bearish outlook and downward pressure on prices. So I think the markets are also the other thing. And I think there are two other aspects, again, that give the market pause at this moment in time. One is the anticipation that there's going to be a deal with Iran that could bring back 1 million barrels a day or more very quickly. Probably volumes far higher than we saw, or at least significantly higher than we saw in 2015, 2016. The Iranians have been placing barrels close to market for a few months now, and you could see that come in. And Carol's absolutely sort of spot on comment about demand. The bit that didn't get in the headlines yesterday that I would argue is probably more important if you were looking at that IEA outlook was that you were going to lose 1.3 million barrels a day of demand. They've revised down their demand forecast from 3.3 million barrels a day now down to closer to 2 million barrels a day. That's exactly what
demand growth in 22 is.
Pardon?
Was that demand growth in 2022?
Demand growth in 2022, exactly. And that's what I think OPEC was looking at the start of the year, worries about COVID in China and the impact that would have more globally. Now you have high commodity prices, you've got interest rates rising, which is going to hit highly indebted countries. So the spillover effect on growth of some of this globally is going to be sort of adding further drag. And under those circumstances, I think it's more difficult to paint a picture of bullishness with absolute certainty. And what you're seeing is a market that's hedging around 100 at the moment as it waits to see what unfolds next.
Tom, one of the other big stories yesterday that seemed to kind of come and go a little bit, but hovers in the ether is the idea of Saudi Arabia buying its oil from China in yuan. And we get these kind of headlines. I mean, we're all saying how many decades we've been tracking this stuff. I won't say that, but Thomas, you look like you've probably not been doing it as long as the rest of us. But nonetheless, there's been moments over decades in which there's mutterings of pricing commodities and oil and other currencies have come up. But on this occasion, I mention it because obviously Saudi Arabia is the biggest actor. China is its biggest customer. And one of the reasons seems to be that Saudi Arabia's disappointment or resentment or anger or whatever scale you want to put it at towards America on its lack of support in Yemen and in the conflict in which Saudi Arabia finds itself in Yemen, that the Washington isn't sufficiently demonstrating concern or support, at least from a Riyadh perspective. I welcome your, I mean, for all of us who don't track Yemen every day, except the horrible headlines, and given how little coverage comes out of Yemen because there's so many few journalists, I'd welcome your deep dive on Yemen. What does that look like vis-a-vis the geopolitical actors? Will peace or will a deal in Iran in Vienna help the Yemen situation? How do you connect these dots?
Yeah, thank you. I mean, I could be here all day doing this. I'll try and keep it as brief as possible. I think, you know, the recent strike on the Emirates on a site just outside Abu Dhabi, I think shows something quite important about the Houthis, right? I think a lot of the time the Houthis are mistakenly simplified as a brute Iranian proxy in a similar mold to Hezbollah or something of that nature. Now, the fact that the Houthis make this strike when Iran are getting closer to the UAE, trying to do a tentative deal with Saudi Arabia, suggests to me that the Houthis still have some kind of agency and free will, if you like. Now, I think that it's been interesting to see Biden's approach to Yemen. There's still been deals done with Saudi Arabia, despite him saying otherwise. The prospects for peace look incredibly difficult. The main issue being is that the Houthis have quite a lot of power on the ground, and I think it's very difficult for Saudi Arabia to make compromises there. And also the Houthis have been really reluctant to come to the negotiating tables throughout the last 7 years. I think Saudi Arabia and China is a really interesting dynamic because, for sure, Biden has been more critical of Mohammed bin Salman and his regime than previous presidents. Now, China, as we all know, doesn't care too much what you are doing in terms of its financial deals and its investment, as evidenced in kind of elements of the Belt and Road Initiative as well. It's an interesting dynamic. I think the thing that I really want to bring attention to is, you're right, Yemen is so underreported. That's the main reason I research it, and it's the main reason I want to raise awareness. We're talking about 7 years of conflict. Estimates range from sort of 230,000 dead to 350,000 dead, depending on who you read. Aisha Juman gives me the best statistics I can think of. And I just want to say as well that what's happening in Ukraine has been harrowing to watch and really difficult, and it should be condemned in the strongest form. But it is hard when you're a student of Yemen and a researcher of Yemen to watch the international reaction to that conflict and then to sort of judge that and look at that through the lens of Yemen, where kind of the Western media have been complicit in underreporting that conflict for a number of years due to the fact that they've been selling weapons to Saudi Arabia for that time.
It's a very difficult story. It's a very dangerous place for journalists. We're seeing journalists being killed in the Ukraine. It's clearly all of these conflicts and all of these geopolitics are forever full of hypocrisies and contradictions. There is no doubt about that. That's the nature of the beast. My enemy's enemy is my friend today, and tomorrow it's something else. Let's go to the survey question and get the view of the room on this point. That was the first sort of early discussion point this morning. Can Putin be rehabilitated into international community after Biden labeled him a war criminal? Your thoughts on that? The international community, of course, is a very big place, and everybody's welcome somewhere. But nonetheless, it does indicate to me that, Carol, that the momentum towards resolution in Ukraine, I don't know, felt to me yesterday like there was two narratives in play, that one being quite positive and the other being that comment that is quite negative. Your thoughts, Carol, on in either case, as we're going into the Middle East weekend here, are we near any kind of major breakthrough in any of these stories? Obviously, the Iran talks, where every Thursday we think we're going to go into the weekend and come back Sunday and the deal is done. Obviously, Ukraine now is on the list. China, COVID, lockdown now on the list of the big three things that could really tip over the weekend. Your thoughts on some of those, on where the tipping point, and if we're close on any?
Yeah, the first thing that comes to my mind is that just as we thought we were going to go back to normal after COVID, and we're going to see each other in person and hug and then, you know, talk freely, we got this problem. And this conveys a kind of new world we are navigating into. And with wars, coming from a country like Lebanon, although I know it's there we had civil war, but if you look at experience around the world, it's very unusual that wars at this scale and with so much hatred and with so much damage created can end with a switch of a button or just with a handshake. There will continue to be, even if there is a peace agreement today, there will always be pockets of resistance. There will always be some problems here and there. You know, but it's just a fact of life that I don't think it's going to be soon, anytime. It's going to be over anytime soon. So that's the unfortunate fact when it comes to wars. But the longer the war drags on, the more the implications, the negative implications will be on global economy, on geopolitics, on energy markets, you name it. At the end, it's happening between two important producers, I mean, of various commodities. Tom mentioned to Yemen, it's not just the bias when it comes to war and who is involved, but here you have both the Ukraine and Russia being important exporters, not just of energy, but of wheat, of other commodities. And look, for example, at Egypt, it is the biggest importer of wheat. And in the Middle East as a whole, Russia and Ukraine are among their biggest exporter of grain. So that has repercussions much more than we talk about energy and oil and gas exports. It touches on even a more important aspect, that is food security. So that's my main concern, that the longer this kind of conflict drags on and these important supplies are disrupted, the more we're going to see spillovers into some countries and economies that are at the moment not on the map in terms of directly affected by the conflict. But I hope that there is a peace today before tomorrow, but that even that does not mean that everything is going to be okay after that. There will be some long-lasting scars from this problem.
Well, let's give Rad the last word this morning and get the survey result ahead of that. Can Putin be rehabilitated after Biden? No, but you know, not by much. My sense is, Rad, and I welcome your thoughts on rehabilitated, of course, is a kind of an elastic word in a sense. You know, what we might see, you know, in the coming hours or days is Russia defaulting on its debt. What's the rehabilitation of something like that? As you mentioned in your earlier comments, the security of Europe, what's the rehabilitation of that? Do you go back to, you know, the previous posture? So those sorts of things. Your thoughts on that and the outlook for some of these major moments of having a breakthrough?
I think you touched it. It's a major moment. I think this is one of those moments that sort of we live through and probably don't realize that sort of how seismic they are and how much of a turning point they are. This is probably the most significant turning point since the fall of the Berlin Wall in terms of Europe. And you know, I think in terms of being a security crisis, as I mentioned, it's probably the most significant security crisis in Europe since the Second World War. I think it's hard at times to absorb that when you're living through it. I think it's hard at times to appreciate that from the outside, but that's certainly the sort of impression I'm getting in Europe, and that is bound to have lasting consequences. I mean, Carl mentioned sort of, just the issue of sanctions and how much of a spillover that's going to have. I think we're going to have redrawn geopolitical alliances out of this. I think the geopolitics of energy is going to be redrawn out of this. I think it's going to create some serious questions for countries around the world in terms of, them looking at their own security guarantees, and how they fit into this new geopolitical pattern and this new what arguably could be a geopolitical divide. And I think it gives, some countries are going to come out sort of very badly in this. And Carl mentioned sort of Egypt. I think, that food security issue is probably going to be the one that runs and has the most lasting impact over the next 2 or 3 years. Beyond that, however, I think, ultimately what we're going to do is start to see this as an event that is akin to the fall of the Berlin Wall, and a new we will be talking about not so much post 1990, but we will be talking about post 2002. And what that means and what that evolves really over the next couple of decades.
Do we need, or is there still a definition to play out, do you think, Rad, on where China sort of stands? I mean, at the moment, it seems they're kind of doing the Chinese dance, the old dance as we started our conversation, where they're sort of trying to stand neutral but swaying. Obviously, they're signaling towards Russian support. Where they end up on this, is that quite a defining part of this, do you think?
I think it's absolutely going to be a defining part of this. I think in some ways, where Russia ends up out of this is going to be less consequential than where China ends up out of this. I don't think we're going to move into sort of a bifurcation a la the Cold War. I think it'll be a lot more messy. I think we were already seeing the regionalization of politics as globalization receded, not disappeared, but receded. And spheres of influence and dominant local superpowers. But for China, China can come out of this with access to cheaper commodities. It can certainly come out of this with much more leverage over Moscow. It can come out of this as an alternative to Western approaches. And a lot will depend on how these crises are rarely linear. So if this continues, it continues to escalate. If we don't get this much desired peace, there are going to be complications down the line. The simple canary in the coal mine, I think, that's going to emerge for China may be if the US or Europe start to impose secondary sanctions and actually start to get force countries to choose which side of the fence they're on. They haven't done so already, but that would be where you start to get really serious disconnects. But I think for countries like China, for countries like India, they will want to maintain neutrality, and they will want to, try and not get caught up in either side of this. The question becomes, and it will be absolutely a matter of where you are looking at it from around the world. The question becomes, in something like this, whether neutrality is possible or whether neutrality has implications.
Well, that's certainly a big point in this neighborhood where we are in the Gulf, and certainly that holding that neutral line for as long as possible, and I suppose as long as China does, it gives others cover to also do so. We'll have to leave it there. It is Thursday morning and the end of our Middle East week, so to speak, in terms of the daily podcast. Oil prices sticking in and around $100 a barrel. Will they be there when we get together on Sunday for the week in review? We'll have to see. There could be some defining breakthroughs between now and then. Rad, lovely to have you. We'll definitely hope you will come back and make it a regular.
As the grandson of an Irish granny, I should have said St. Patrick's Day. There will be sort of thunderbolts from heaven sent my way if I don't say Happy St. Patrick's Day to you.
Exactly, of course, and thank you. Tom, very welcome to the table. Hopefully we'll have you back. Carol, thank you so much. Great to see you, and have a great weekend, everybody. And we'll catch you on Sunday morning with the Week in Review, 10:30 UAE time. All the best. Thank you.